Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 27th of March 2024. Gold is looking quite bullish from a technical point of view. It is managing to hold on to most of the gains made in recent weeks. So far, it is looking good for the bulls, and we haven't seen any major bearish reversal patterns being printed on this daily time frame chart yet. We did have this inverted hammer candle a few days ago, in fact last week, which looked quite bearish when it was created, but there was no downside follow through whatsoever, and gold managed to hold above the December's old record high at 21.46. So that level is now going to be very important insofar as the short term is concerned. For as long as we remain above it, the path of least resistance would remain to the upside. At the time of this recording, gold is testing this 21.95 level, which has proven to be a bit of a resistance level in the last couple of weeks. A daily close above that could potentially pave the way for new record highs. So the next upside target, should we close above 21.95, would be the record high itself at 2,222. Then you'd have to go to your weekly time frame or even the monthly to figure out where the next potential profit target area could be for gold. And looking at the weekly chart, we can see that the 161.8% Fibonacci extension level comes in at 2,359, which was derived from the most significant downswing that took place between August 2020 to September 2022. Right now, we are testing the 127.2% extension of that, and we've seen some profit taking around this area. On the downside, the key level of support is here on this weekly time frame at 2075 to 2081. This area had offered significant resistance in recent years before we finally broke above it cleanly this time. And so if gold were to pull back to test that area, I would expect to see a strong rebound from around that zone. Meanwhile, if you have a look at the long-term chart of the other precious metal, silver, well, it is not doing what gold is doing at the moment. It is continuing to remain stuck inside this consolidation pattern, but given the fact that gold has recently broken out to repeated new record highs, I'm expecting silver to follow suit. So one way to gauge the potential targets and how far silver could rise is to look at the prior consolidation. And as you can see, it has been stuck in this consolidation range since the summer of 2020, so nearly 4.5 years. And so if it were to break to the upside, which I think it will, we could see a significant move to the upside, potentially all the way to the record high of near 50, but we'll cross that bridge if and when we get there. First things first, let's see if silver will break out of this consolidation pattern, and if it does so, will it then be able to reach the February 2021 high? That will be the first immediate target on this monthly time frame. On the daily chart, you can see that silver is testing support at 24.50 or thereabouts. We have the 21-day exponential moving average also coming into play here as well. This area was previously resistance prior to the breakout a few weeks back. So it's essential that silver can hold here if we are to see a sharp move higher from here on. Resistance is seen at around just below the $25 level. You can see the wicks of the previous day's candles all come in at around 24.90 area. So a potential move above that could trigger a squeeze higher and initially lead to a move above the 25.75 area, which was the high from the previous week. Here's the daily chart of WTI crude oil. As you can see, oil prices have been stuck inside a bit of a consolidation pattern in the last few days, but essentially the trend is bullish, as indicated, for example, by this bullish trend line and the fact that price is above the 21-day exponential moving average and also the 200-day simple moving average as well. The key area of support is at around 80, this blue shaded area, where it had previously offered strong resistance. So even if crude oil were to weaken a little bit further from here or consolidate for a few more days, this will not necessarily end the bullish trend. So if that area continues to get defended, then I would expect to see a continuation to the upside, with the first objective being the most recent high at 82 at 83.12. Thereafter, we have the 61.8% Fibonacci retracement level of the most significant downswing that took place between September of last year to December. So the 61.8 comes in at just below the 85 area. So I think 85 is the next logical target. We could get there in the next few days, or perhaps in the following week, for as long as we don't see any fundamental changes that impact crude oil prices. The FX markets have been quite quiet this week because of the lack of any major economic news, but the Japanese yen has been an active currency, not just against the US dollar, but other currencies as well. And this is because we've had verbal intervention from various officials from the Japanese government. Overnight, the finance minister warned of intervention in the FX markets, and I think that's what caused the dollar yen to reverse after earlier hitting its highest level since 1990. So key resistance at just below that 152 handle held once again. This area had offered resistance in November of last year and also in October of 2022. So the threat of intervention from the Japanese government is what's helping to keep this currency pair below the 152 handle. And so that level is going to be very important to watch moving forward on the upside. On the downside, first level of support to watch is the 150.88 level, which was the high from February. Below that, we have the psychologically important 150 handle, which is where we also have the 21-day exponential moving average coming into play. And then thereafter, there's not much to see until 149.20, which is the base of the most recent breakout. Any move below 149 handle, I think, would be bearish insofar as the short term is concerned. If that happens, then I wouldn't be surprised if the dollar yen were to go all the way down to the 200-day moving average at around 146.75 area. For more market insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.